everybody. It's great to be speaking to you, and especially this time, because as you know, crypto's had a rough run since October. Pessimism has risen. I've known a lot of people that are ready to throw in the towel. And so I think this is a great time to be talking to you about crypto and why I'm so bullish on Ethereum. So the title of the talk is The Crypto Super Cycle is Intact. A little background, I have 3 jobs today. I'm the head of research for Fundstrat Global, which does macro and crypto research. I'm the chief investment officer of Fundstrat Capital, which manages 3 ETFs, including Granny Shots, which is the fastest to $3 billion in the history of any active equity ETF. And I'm chairman of the board of BitMine Emergent Technologies, which today is the largest holder of Ethereum in the world. And just on social media, if you want to follow us, we have 2 handles, @Fundstrat, and BitMine is @BITMNR. Okay. So in the next 25 minutes or so, this is the rundown of what I want to talk to you about. First, why we're still really bullish on crypto. It's all about tokenization. Number 2, I think crypto prices have bottomed. And I think that in the next 8 weeks, we're going to shatter the Bitcoin 4-year cycle. I don't think it's going to be a 4-year cycle this time. Number 3, Ethereum is the future of finance. I mean, I think that's really important because Ethereum is going to be really central casting for the tokenization of the future. Number 4, tokenization is a bigger unlock for Wall Street than many appreciate. And I think that many people think tokenization is simply digitizing assets. I think that's an oversimplification of the unlock that's coming. And number 5, why I think a proper digital asset treasury company like MicroStrategy or BitMine play a central role in what's going to happen. And in fact, you may outperform the crypto itself by owning a digital asset treasury. Okay, so 2025 is all about tokenization, but let me level set for a bit, and let's look back at the last 10 years. In December 2016, okay, you could have said, I want to own the S&P, and you would have tripled your money, which is pretty good. You could have bought gold, because you might have been a gold bug, and you quadrupled your money. Or you might have been really smart and bought NVIDIA and made 65 times your money. But if you bought Bitcoin 10 years ago, which is right around the time we started recommending it to Fundstrat clients, you had 112x. But outperforming Bitcoin was Ethereum, which was a 49 times return. I'm sorry, 500 times, almost a 500 times return of your money. So that was the last 10 years. Now we're in 2025, and when I look back at what happened this year, we've had a lot of major positive fundamental events, but the price action's been terrible. So here are some high-level bullets of what I think have been the high points. The first is the US government became very pro-crypto and setting the standard for the Western world. The second is several US states and the US government planned or executed a strategic Bitcoin reserve. Huge deal. The third is that BlackRock's Bitcoin ETF is now their top 5 highest generating generating product for BlackRock. I mean, think about that. They launched that only a year and a half ago, and it is one of their most profitable ever ETF products. Now, JP Morgan, which as you know, has been a hater of crypto for many years, is launching a JP Morgan coin on Ethereum, but they're not the only ones, there's others. Tokenization has become a big buzzword and priority for all these major financial institutions. And then these last 2 things are probably more important than you realize. There have been 2, actually probably 3 breakout products that are crypto native that have changed how traditional financial markets make decisions. One example is Polymarket, which really used prediction markets to actually generate so much information that, I mean, at Fundstrat, I think it's the closest thing to a crystal ball. And then Tether has proven to be the top 10 most profitable bank in the world. I mean, think about that. It's a crypto native, singular line, monoline business, and it's one of the top 10 most profitable banks in the world. Okay, but I think the real story in 2025 is tokenization. It all started with stablecoins, and that was Ethereum's ChatGPT moment, because all of a sudden Wall Street realized that if you just tokenize the dollar, you could make a lot of money. But now financial institutions are saying tokenization is going to transform finance. In fact, Larry Fink says it's the biggest, most exciting invention since double entry bookkeeping. I mean, first of all, I don't know if that's that exciting, but it is apparently a huge deal. And I mean, this picture is, this is monumental too. Brian Armstrong and Larry Fink together talking on DealBook. Okay. So if you're bearish on crypto, or you think the best days are behind us because of the last 10 years, I'm going to disagree. Keep in mind today, there's only 4.4 million Bitcoin wallets that have more than $10,000. Okay. By contrast, there's almost 900 million individuals around the world with more than $10,000 in their retirement accounts. So if Bitcoin were to be held by all these accounts, that's a 200 times increase in adoption. That's still, to me, exponential and hyper growth. And Bank of America Fund Manager Survey still shows 67% of fund managers have zero allocation to Bitcoin. Wall Street wants to tokenize all financial products. And keep in mind, financial products today, if you include real estate, you know, it's almost $1 quadrillion that they want to put onto the blockchain. And then, of course, in the agentic world, it's going to create a need for decentralized trust and security, of course, which is what blockchain solves. So to me, I think the best years are still ahead. Okay. So let me explain to you why I think crypto prices have bottomed. First of all, crypto is acting like there's a crypto winter, because gold's up 61% year to date, S&P's up almost 20%, and you could see Bitcoin and Ethereum actually are negative year to date. And I really like this article by Jeff Dorman at Arca, who said, "The selling that nobody can explain." I think many people can say why they think crypto prices have fallen, but nobody really understands why. But here's what I just want to point out. This is Bitcoin's year-to-date performance. And Bitcoin was having a good year until October 10th. Now, after October 10th, a lot of people try to explain why crypto is declining. It's the quantum risk to Bitcoin, crypto winter starting. I have so many traditional investors telling me that's the only reason. They say, Tom, it's the 4-year cycle. Of course, we had the October 10th liquidation event, the biggest liquidation in history. A lot of people say it's the AI stocks have captured mind share. MicroStrategy recently said they might sell their Bitcoin. That scared some people. MSCI may exclude digital asset treasuries from indexes. And of course, Tether got a ratings downgrade. So maybe some of these could explain why crypto's down. But just keep in mind, crypto was up 36% until October 10th, and then it's gone straight down. I personally think it has a lot to do with deleveraging. And as you know, after the FTX collapse, it did take 8 weeks before market makers recovered and crypto could start to see price discovery again. And we're basically 7.5 weeks past that event. Now, Bitcoin made a decision about 5 weeks ago to engage Tom DeMark, because we wanted to understand what was happening with crypto prices. Now, if you don't know who Tom DeMark is, he's a legendary market timer. At Fundstrat, I've used him to call 2 of the major market lows, the March 2020 low and the April tariff lows. Those were all in coordination and consultation with Tom DeMark. And Tom only has 2 clients today. We're his 2nd client, and he's very expensive actually. Tom has advised us to dramatically slow our Ethereum purchases. And as you can see here, once we engaged Tom, we took a different strategy with regard to our Ethereum purchasing. And you can see our Ethereum purchases fell by half to 50,000 a week. But we've begun to buy Ethereum again. You can see last week we bought almost 100,000 ETH, twice what we did 2 weeks before. And I will give you a hint, we definitely bought more than that this week because we believe Ethereum prices have actually bottomed. So we're bullish on Ethereum. But let's go back to the 4-year price cycle for Bitcoin because it's still hard to escape this chart. 3 of 3 times since the history of Bitcoin, the 4-year cycle, or 3.91 years, exactly called the top and the lows. So the question is, why is Bitcoin subject to a 4-year cycle? We asked the Fundstrat Digital Assets team to give us the 5 most logical reasons for this. There's the halvening cycle, there's monetary policy, margin debt. But the 2 things that I think have actually become more important in our view is gold versus copper, and then the ISM, which is just your traditional economic business cycle. So let me explain. So the halving could explain Bitcoin because the halving is pre-computed, but the problem with the halving cycle explaining Bitcoin's price is that there's a lot of other things that have a 4-year cycle. Presidential elections, Olympics, World Cup, etc. But there are some things that follow a 4-year price cycle that no longer follow a 4-year price cycle. And one of them is copper versus gold. And this is a tweet from AO BTC analyst. And we decided to recreate it, which is, let's look at the ratio of copper prices, which is measuring industrial activity, to monetary base, which is gold. And in the past, you can see it had a predictable 4-year cycle, except this time. And if you line it up with Bitcoin and copper, they actually line up almost perfectly. But copper and gold are not in a 4-year cycle now because that ratio should have peaked this year. Similarly is ISM. ISM is a measure of US economic activity, and historically that had a 4-year cycle. But as you can see, the ISM is not following a 4-year cycle today. It's actually stayed below 50 for almost 3.5 years. If you line up the ISM to Bitcoin, you can see it almost perfectly explained every Bitcoin cycle, including the original Bitcoin price peak. So it's even more explanatory than the 4-year cycle. But again, this time the ISM is not peaking. So here's the question I'd ask you. If the industrial cycle is no longer following a 4-year cycle, and copper gold isn't following a 4-year cycle, I'm gonna say I don't know if Bitcoin should follow a 4-year cycle. So I'm not in the camp that Bitcoin price has peaked. And the only way we'll know is if we make new highs in January, which is our bet. Okay, so let me explain to you why Ethereum, now that we've talked about crypto, Ethereum is the future of finance. And what I mean by that is Ethereum in this year, it's having its 1971 moment. I've done past dedicated videos explaining this, so I'm not going to spend much time on it today. But what I'm saying is that in 1971, the dollar went off the gold standard. And in 1971, it galvanized Wall Street to create financial products to make sure the dollar would be the reserve currency. Well, in 2025, we're tokenizing everything. So it's not just the dollar that's getting tokenized, but it's stocks, bonds, real estate. And Wall Street is again going to take advantage of that and create products onto a smart contract platform. And where they're building this is on Ethereum. This is a list of basically every major financial institution, and they're building products on the blockchain. And today, if you look at the share of real world assets, and the prior panel talked about that, the majority of this, the vast majority, is being built on Ethereum. And not only that, but Ethereum is continuing to upgrade its capabilities, and today, the Fusaka upgrade was completed. So again, Ethereum is increasing its capabilities. And I thought this was great. This week, if you guys know Eric Voorhees, he was one of the original Bitcoin developers. Even he has said Ethereum has won the smart contract war. Okay, so that gets us to the price of Ethereum. As you know, Ethereum has been range bound for 5 years, as I've shaded here, but it's begun to break out. And that's one of the reasons why myself and Mosaics, Shen from Mosaics is here, we got very involved with Ethereum by turning BitMine into an Ethereum treasury company, because we saw this breakout coming. And maybe more importantly, the Ethereum Bitcoin ratio we think is also going to have a breakout. Now this might actually be more important, because Bitcoin and Ethereum are really the two most important crypto L1s or blockchains out there. But if 2025 is about tokenization, that means Ethereum's utility value should be rising. Therefore, you should watch this ratio. Okay, well, what does that mean for Ethereum's price? Well, I think Bitcoin's going to get to 250,000 within a few months. And if Ethereum price ratio to Bitcoin gets back to its 8-year average, that's $12,000 for Ethereum. I mean, that's a huge move. If it gets to the 2021 highs, that's $22,000 for Ethereum. But I think Ethereum is going to become the future of finance, the payment rails of the future. And if it gets to 0.25 relative to Bitcoin, that's 62,000. So I think Ethereum at 3,000, of course, is grossly undervalued. Okay. And in the final minutes, I want to talk about why tokenization is a bigger unlock than you realize. Larry Fink says we're at the beginning of tokenization of all assets. And there's 5 reasons tokenization unlocks things, okay? It's fractional ownership, it does reduce cost, it allows 24/7 global trading, there's more transparency, and in theory, there's more liquidity, okay? But I would say that these are just the raw ingredients. And in our minds, tokenization is actually going to take Wall Street into a next level of evolution. And what I mean by that is we have to understand what you can do differently if you begin to tokenize assets, especially combining it with prediction markets. For instance, most people who are talking about tokenization are doing what I call a very simplified view. They're going to take a painting like this and they'll fractionalize it so you can own one grid of this asset. But a second way to do a tokenization is to factorize a business, okay? So let's say we break this painting down into its prime colors, and then you can just buy, whatever factor you want. An example is Tesla. For instance, you can time tokenize Tesla. You can buy the NPV of earnings on a specific date. You can product tokenize. You can just buy the present value of a specific product stream. Okay, so in other words, it's blending prediction markets with actual ownership. You can geographically tokenize Tesla. You can buy the NPV of a specific region, or you can financial statement tokenize. You can buy the tokenization of its subscription revenues. These will all still solve for the price of the stock, but you're going to create an unlock that better explains the price of Tesla. For instance, we know Tesla's stock price is the sum of its future earnings. So let's say that you could tokenize and purchase a specific year of Tesla's stock earnings. And we know that Elon Musk is going to get his pay package based on a 10-year plan. So you may only want to buy the present value of 2036 earnings. So you can do that today with a prediction market, or you could actually have this as a true tokenization of the stock, and everything else is the other time periods. The second example is product tokenization. We know Tesla is EVs, robotaxis, full self-driving. I don't even have Optimus Prime, solar, but of course ultimately the biggest value of Tesla is Elon himself. So if you could tokenize Tesla stock, you could isolate the implied value of just buying Elon Musk himself, and as you know, he's an N=1 person. Okay, so that's tokenization. I think of course you need smart contracts and prediction markets, and really working in conjunction with both is what is, in our view, a huge unlock. And in fact, BitMine is trying to find projects that are really moving this forward. So that gets us to the last point, which is, well, you can buy Ethereum because we're bullish on Ethereum, but I think you should also realize that digital asset treasuries are playing a role in transforming Wall Street. Okay, I'm going to start with Ethereum specifically, but in our view, a proper Ethereum treasury company is actually a crypto infrastructure business, and I'll explain it. First of all, Ethereum is a proof of stake blockchain, so Ethereum treasuries are staking Ethereum, so we're providing security. Now, in return, we get a yield, and that's revenue for the treasury companies. And we are essentially improving the security of the network, but also acting as a bridge between traditional finance and the DeFi world. And finally, stablecoin issuers are going to, in our view, ultimately want to stake Ethereum because it is the underlying base monetary layer. But for all of this to work, I think the most important element of a crypto treasury is it needs to have stock liquidity. Stock liquidity is a measure of how Wall Street views that company as relevant to the future of finance. So let's look at the two biggest treasuries. MicroStrategy today is the 17th most traded stock in the stock market today. Just think about that. Like, let's say that you guys think no one cares about MicroStrategy. Wall Street certainly does. It is trading almost $4 billion a day, and it trades, it trades more trading volume than JP Morgan, for instance. Now, BitMine, which essentially was created 4 months ago, is the 39th most traded stock in America today. And as I zoom in here, you can see it trades more trading volume than General Electric, which has 30 times the market cap, and it trades almost the same trading volume as Salesforce.com, which is 20 times the market cap. So these two companies, according to the equity world, are extremely relevant. In fact, BitMine and MicroStrategy account for 92% of all crypto treasury trading volume. There's 80 crypto treasuries, and these two companies are 92% of the trading volume. And we can see that here. MicroStrategy is 3.6 billion a day. BitMine's 1.5 billion a day. After that, there's almost no trading volume. It drops off by 90%. Okay, and that's where MicroStrategy and BitMine are pursuing different strategies, because MicroStrategy is purpose building their crypto treasury to be what Michael Saylor calls a digital credit vehicle. And he's financialized his balance sheet with a series of products, and it's been phenomenally successful. On the other hand, BitMine is bridging Wall Street and Ethereum and DeFi. So let me explain. Number one, BitMine's the largest holder of Ethereum in the world. I think that's a pretty impressive feat because 5 months ago, BitMine owned 0. Now, BitMine has announced that we have Maven, our staking solution, and when it's fully implemented, using the Caesar index, we should generate about 2.9% staking yield on our Ethereum holdings. That's about $400 million a year in net income, or $1.3 million a day. I mean, think about that for a moment. I mean, that's That's a lot of money. And it's done with a completely clean balance sheet. BitMine has over $12 billion worth of Ethereum, a little bit of Bitcoin, some moonshot investments, and about $900 million of cash. So there's no debt. But that's only part of it. As you can see, this is part of a DeFi strategy. The first was BitMine is doing moonshot investments. It made a big investment in ACO, which is proof of human, an ERC20 token called WorldCoin. We have our Maven staking solution that's being rolled out next year. We're working very closely with the Ethereum Foundation in partnership to really help bridge Wall Street and crypto world. We're already looking very hard at investing in DeFi projects. And of course, we're in the process of creating BitMine Labs. But that's only part of it. We're also planning to bridge finance. Because of BitMine's sizable trading volume and because of the macro experience of both Mosaics and Fundstrat, we have enormous Wall Street connectivity. We also realize that BitMine is very complementary to a lot of consumer services. It already is a very recognized brand. We are one of the most important stocks in the stock market today. There is an enormous BitMine community that already exists, and BitMine is building a lot of its own technology. So the roadmap looks good for us. You know, we have a Made in America validator network, which is Maven. We're really investing in the crypto community and in BitMine moonshots, and of course, targeting at least 5% of the Ethereum network. That's the end of my presentation, so thank you.
Thank you, Tom. Now I'm going to get some of our team to bring in some seats, and we're going to sit down and ask you some questions from the community, if that's fine. You're going to be in the hot seat for a little bit, but it'll be fantastic. So, without further ado, okay. Fantastic, okay. So Tom, starting off, we talk a lot about how, and you speak a lot about how macro movements really can impact price in crypto. But I think one of the first questions that we had submitted from the community was how macro developments, how they can really impact crypto adoption. So what's your take there?
Yeah, I think macro does play a big role in crypto. Stan Druckenmiller famously said that 80% of the success of a stock trade or investment idea is macro. Meaning, you could find a stock or a crypto project or a venture project and be an expert, get the entire thesis right, but that's only 20% of the success. And the reason for that is, as you know, crypto, for instance, is dependent on macro. Regulatory risk is huge. Monetary policy plays a huge role, like the Fed and other central banks easing or tightening affect money supply. That affects gold prices. It's going to affect Bitcoin. And we also know that price itself drives sentiment. I mean, we saw it on ample display, as you guys know, from October 10th to mid-November, as crypto prices fell, sentiment collapsed. I mean, you know, I've been involved with crypto for about 10 years, not as long as some OGs, but I thought sentiment collapsed at the levels that I saw like in 2018. So macro plays a big role.
Okay, and now let's focus in on Ethereum a little bit more in the specifics there. And when we talk about adoption versus utility of ETH, if we see banks, for example, if we see them owning or utilizing ETH rather, will they need to own ETH in order to utilize it? And can you just clarify that for what it means for the kind of expected accumulation of ETH?
Yeah, this is a really important question, because I've heard a lot of people say, oh, Tom, listen, Wall Street's going to build L2s, layer 2s on top of Ethereum, and therefore they don't really need to or care about Ethereum's price. In fact, someone told me that it's like Linux. You know, there's a lot of people that use Linux And even if you use Linux, you don't have to own Linux, the company. I think that's one way to think of it, but I would say the better way to think of it is to realize that crypto is a fat protocol, right? We know the price of Bitcoin rewards those who are involved in the community. I mean, that is really the network effect of Bitcoin itself. Bitcoin doesn't make money by charging fees. And in fact, it's a lot more akin to a gamer. Like, let's say that you are a great gamer, and you like know every game cold, and you realize that all these games run on NVIDIA. Well, you could either spend all your money buying like shields and icons and game economy, or you could buy NVIDIA and still play the video game. And if you did, you'd be like rich, because NVIDIA drives all the gaming ecosystems. And to me, that's how banks are going to view Ethereum, which is, as they tokenize all these products, they're realizing that they are now staking their future on a neutral blockchain. They want that blockchain to be 100% uptime. And as you know, there's only one layer one that's had 100% uptime in its entire history, and is now scaling dramatically with a recent upgrade. And of course, it makes perfect sense that they're going to want to have a say in actually how that network evolves, which means that they either want to be staking Ethereum, or they want to own a big chunk or be involved with the community. So to me, as tokenization takes place, owning Ethereum is going to be like a bank owning working capital in dollars. I mean, it'd be almost funny to say someone said, oh yeah, I mean, my stock is quoted in dollars, I don't care what the dollar does. I mean, of course they care. So everyone's going to care about what Ethereum does if that's where we're tokenizing everything.
And another question that we had through was, if we do see financial institutions that are utilizing ETH, what that could do to the value. And I know an obvious answer is number gut, but I think a little bit more of a technical deep dive on what we can expect in the long-term price movements as we do see more financial rails using Ethereum.
I mean, I had a grid. I think the simplest way, in my mind, to think about the future price of Ethereum is to measure it against Bitcoin, because to me, Bitcoin is still the most important blockchain. No crypto project's going to go up in price if Bitcoin is going down, and I think everything will be measured relative to Bitcoin. So to us, as Ethereum becomes more central, its network value in total should start to approach that of Bitcoin. And of course, if it matches Bitcoin's network value, it's, we're talking $200,000 ETH.
And now 5 to 10 years ahead, looking in the horizon, because crypto is still such a new space, and for everyone in here, you're all still so early. What is BitMine's 5 to 10 year business objectives, and where do you see the market in terms of adoption down the line?
We're really very constructive on Ethereum. I mean, that's why we believe there's a super cycle ahead for Ethereum, because digital gold was really the reason Bitcoin did so well for the last 10 years. And it won, right? It's a store of value, and it's the accepted store of value. But when we think about the next 10 years, it's really about Wall Street tokenizing all assets. And again, it's important to realize that you need to be creating liquidity to support a tokenized product. If you tokenize something and it has no liquidity, you just have now a busted asset. And that's why Wall Street is going to be finding partners in that world of tokenization. And the Ethereum community, as you know, it's a huge global community, a lot of great ideas, but they need to be thinking about how to, again, as Vitalik said, he's pro-users. Wall Street's going to be a user of Ethereum. You need to have someone that can translate that. And that role is really underestimated in people's minds. A lot of people say like, oh, well, people figure this out. They actually don't. I mean, if you're at take JP Morgan, 300,000 employees, there might be 10 evangelists at JP Morgan. But how do you convince Jamie Dimon to make the right decision? That's where a company like BitMine plays a central role. And again, as Ethereum's price goes up, and we own 5% of Ethereum, we're going to exponentially benefit from all of that activity taking place. And again, as I've kind of mapped out, I don't think we're just simply a holder of Ethereum. You know, we're really playing a bridge role on the traditional financial services side, and of course, we're helping bridge that on the DeFi side.
And you've given a shout out to the evangelist there, and I think from the Wall Street side of things, you have been an extraordinary evangelist for crypto. And I'm curious to hear your findings for crypto, how you got into the space, your kind of introduction into the industry, and what compelled you to be where you are today.
Yeah, I guess I could give a little background. So we first wrote our first white paper on Bitcoin in 2017. And at the time, we were trying to answer a question to ourselves. I had started Fundstrat as an independent research firm. And one day I was watching CNBC and I saw the price of Bitcoin was like 1,000. And I was like, wait, because when I was at JP Morgan, and I was, the chief strategist there, we talked about Bitcoin in like 2013 or whatever, and Bitcoin was like, I don't know, $70 or something. And our FX team says that it had a chance to become a reserve currency, but he thought it was like for the domain of like drug dealers and, smugglers or whatever, and tax evaders. But I knew that nothing ever goes from 50 to 1,000 without meaning something. So we spent the summer studying it, and while I didn't have a complete understanding of Bitcoin or like blockchains, I realized that you could explain 97% of the rise of Bitcoin from 2013 to 2017 by just the number of wallets and the activity of wallets. So to me, like, it just clicked. I said, okay, this is a network value asset. And when I first wrote about Bitcoin, and we recommended investors put at least 2% in, and it was under 1,000, we met with a lot of resistance. People actually thought we had lost our credibility. In fact, and my partner at Fundstrat contest, we actually lost a lot of hedge fund clients after that first white paper, because they're like, Tom, how could you talk about something that has no intrinsic value and actually recommend it? So it was actually a very weird period, because I was quite excited about something and it was actually hurting our business. But it reminded me of wireless, because before I was a strategist, I was a tech analyst. So my first half of my career out of college was studying the wireless industry. And at that time, there were only 34 million cell phone users. Today, there's 7 billion. But in the early 90s, cell phones were considered basically a yuppie toy. People thought cell phones would eventually be given away for free to protect long distance and local telephones. And that's because the people that studied telecom were all 50-year-old people, and they didn't care about cell phones because their lives were already established, and they thought it was just something dumb. Whereas I was in my 20s and I realized cell phones would really improved how I communicate with my friends. And then I realized that only young people understand new technology. So the reason I think we got crypto right was I wasn't thinking like a middle-aged boomer, but I was trying to think about how young people might use new technology. And if you've been in crypto a long time, congratulations, because you're really smart for sticking to it, but you're probably 10 years older now. So don't suddenly think that your mindset is actually how the future people are going to adopt crypto. It's really people in their 20s. And look what they're doing. Huge users of Polymarket and Callsheet. They care about social outcomes. They'll care about factorizing. They may not want to just buy Tesla. They might want to make a specific bet on Optimus Prime. Well, guess what? That's what crypto will unlock.
I love that. And we put a tweet out late last night and we invited the community to submit and ask questions, and we had some fantastic ones that came through. One came over again and again and again, and Tom, you are known for your bold calls on the market. Ethereum and Bitcoin price predictions. I have to ask, I cannot get the Tom Lee here and not ask the price predictions. So pick your time frame. I mean, we'd love to say, should we say 2026? What does the community think? Yeah, end of 2026, is that okay?
Okay, well, end of 2026, so a year from now, first of all, I don't think there's a 4-year cycle. So I think Bitcoin makes new highs in early 2026. And, well, we'll find out, right? We'll find out in a few weeks. But if that's the case, then I think Bitcoin is going to basically pattern match what happens to the S&P. And I think the S&P next year could be doing really well. I think the first part of the next year, S&P might have some headwinds, but I think it's really going to take off in the second half. So I think Bitcoin is 300,000-ish at the end of next year. But if that's the case, I think Ethereum is lights out. I think it's by the end of next year it could be over 20,000.
Okay, heard it here first. Tom, we have to invite you back next year now to see if the...
Or I might not show up.
Fantastic, Tom. Thank you so much. That's all we have time for, but I could not thank you enough for coming by today and sharing your insights on stage. An absolute pleasure to have you. Ladies and gentlemen, Tom Lee. Woo!